Hey everyone, welcome back to our channel where we break down complex economic topics into digestible insights. Today's video dives into a topic that's on every investor's radar and has far-reaching implications for the broader economy. Is the housing market a threat to growth? This question has been looming large, especially given the current economic climate. Now, let's break it down. This week, starting September 4th, is packed with some critical updates that could shape our economic outlook. We have some critical updates coming up that you won't want to miss. We're talking revised second quarter productivity data, which could provide new insights into how efficiently our economy is functioning. The Federal Reserve's Beige Book report will also be released, offering a snapshot of economic conditions across various regions. And let's not forget the non-manufacturing business activity index. Let's face it, these updates are crucial for understanding the current economic landscape. It's going to be a slow week on the economic front, but that doesn't mean it's any less important. The Labor Day holiday will keep the data flow pretty light, giving us a moment to catch our breath and analyze what's coming. But the revisions to second quarter labor productivity results are definitely something to keep an eye on. Here's the kicker. The second pass at the gross domestic product data for the second quarter had a huge surprise, catching many analysts off guard. Not only did American businesses produce more goods and services, but they also managed to do so more efficiently. They also paid their workers a lot more, which is a significant development. Wages and salaries from April to June actually grew by 8.6% compared to a year ago, a substantial increase. The original estimate was 6.8%, which was already impressive, but this new figure is even more remarkable. But this new figure marks the strongest yearly gain in compensation since the third quarter of 2000. So, what does this mean for investors? An increase in wages can be a double-edged sword. On one hand, it signifies a healthier economy. Higher wages mean more disposable income for consumers, which could lead to increased spending and stimulate economic growth. More disposable income often translates to higher consumer spending, a key driver of economic activity, which could lead to increased spending and stimulate economic growth. On the other hand, there are potential downsides. Higher labor costs can squeeze profit margins for businesses, making it harder for them to invest and grow, potentially leading to higher prices for goods and services, which could dampen consumer spending. And here's where the housing market comes into play. With higher wages, more people might be looking to buy homes. More people might be looking to buy homes thinking they can now afford it. But we're still dealing with high interest rates, making mortgages more expensive and less accessible. This could slow down the housing market, making it harder for people to buy homes despite higher wages. And if the housing market struggles, it could have a cascading effect on the broader economy. It could ripple through the economy, affecting everything from consumer spending to business investments. Affecting everything from consumer spending to business investments, creating a complex web of economic challenges. The Federal Reserve's Beige Book report will give us some insights into how different regions are faring, providing a more granular view of the economy. Keep an eye on this report. It can provide valuable clues about local economic conditions and potential growth areas. It can provide valuable clues about local economic conditions and potential growth areas, helping us understand the bigger picture. And don't forget the non-manufacturing business activity index, which is another critical piece of the puzzle. While it might not grab headlines, this index is a good barometer of the service sector's health. This index is a good barometer of the service sector's health, which is crucial because services make up a large part of the US economy. Because services make up a large part of the US economy, understanding this index is vital for a comprehensive economic outlook. So as we head into this slow economic week, pay attention to these key updates. Pay attention to these key updates. Revised productivity data, the Beige Book, and the non-manufacturing index. They might not seem like much, but they could hold important clues about the future of economic growth. But they could hold important clues about the future of economic growth and whether the housing market will haunt it. And whether the housing market will haunt it. That's all for today. Don't forget to like, subscribe, and click the bell icon for more insights. See you next time.
Like, share, and subscribe to our channel for more updates.